Hey everybody, it's Christy McGowan, Next Home, Our Town. We're so excited to have our new brokerage in Waco, Texas, and it is so orange. But anyway, I wanted to talk to you a little bit about something that a client called me about today. And I had an open house this weekend, and this was also like everybody asked this question, and everybody is super concerned about a recession. And I think that most of them kind of feel like, oh, well, if a recession happens, well, if the market crashes, and if all of these things happen. And so there's a lot of fear out there. And so I wanted to tell you that as of Monday, and I'm looking at my notes, so I apologize, I'm not looking straight at you, but I want to make sure I get these correct. As of Monday, the National Bureau of Economic Research announced that the U.S. economy is officially in a recession. Okay, so we've already had 2 months of significant decline in economic activity. And so we have 2 consecutive months, that means we have had a recession. So March, April, May, and here we are in June. So April, March, when COVID happened, April and May, certainly everything slowed down. Duh, right? So we are already in a recession. But what everyone seems to relate to is what happened in 2008 when we had a recession, but it was due to a housing crisis. And so that's what people tend to think. And the first thing I wanted to say is, people are saying, oh, well, the stock market's going crazy. We don't really know what's going to happen. So we're afraid to buy anything. And I totally get that. So I was doing a little bit of research on gross domestic products. How can I explain it? I can't even say it. But anyway, housing is such a huge part of our GDP that even if our international exports aren't going well, even if government spending is down, we may have a recession because of many, many different markets, but doesn't necessarily mean that the housing market is going to crash. So here's 4 major differences between today's recession and 2008's recession. Number one, families have large sums of equity in their homes. So a lot of people that I've talked to, if you are talking to people about who have refinanced their home or trying to refinance their home or trying to buy a home, what they're telling you is that it's taking forever to get an appraisal. Well, that's because people are looking to survive this downturn in the economy and stay at home and social distancing and lack of work. By accessing the equity in their home. They're doing cash out refis, right? So they can get, my husband and I actually did that. We accessed the equity in our home to help us pay our bills through COVID until everybody can get back to normal. So families have tons of equity in their homes. Number 2, we have a shortage of housing inventory, not an overabundance. We are still already seeing competitive bids out there because now that things have started opening up and people are starting to move around, all of this pent up demand from we wanted to move, we needed to change. Okay, now we're not going to be going to the office anymore. We're going to be working from home. Well, let's move closer to family. So now that everybody's open, everybody is moving, and we are seeing people making competitive bids, multiple bids on houses that are hitting the market. Number 3, irresponsible lending no longer exists. As a matter of fact, it's really hard to get a loan, and it already was hard. But now since COVID, they have reduced the debt to income ratios, and meaning you have to have less debt, or that's what I mean. You have to have less debt and more income, and the credit score itself has to be much higher these days, or you're not getting a loan. We've had several buyers that we've had to postpone a couple of months until we can get their credit repaired, and we have done that successfully. But it takes a little bit longer to get approved these days. And number 4, home price appreciation is not out of control. In Waco, in Texas in general, pretty conservative economy. Waco, we tend to bump along 2 to 3%. I think, since 2008, when things started to really recover and go, we might have gone from 4 to 6%. But still, year over year, 2 to 3, pretty safe investment, but long-term investment. But prices just aren't, I think they were really, really high, but they have corrected and they're sort of stabilizing. But home price appreciation is not out of control. So we need to realize that just because we are in a recession, that this doesn't mean a housing crash will follow. And actually, in 3 of the 4 previous recessions prior to 2008, home values actually increased. So we can see that because when we have a recession, typically the interest rate goes down, which it's doing right now. Home buying starts happening, and supply and demand, so home prices actually increase. So anyway, I hope that makes sense. I hope I didn't bore you. I hope I actually helped you allay some of your fears about whether you're wanting to list your home. And if you're just curious about what your home would go for today or in the next 60 days while we're having this late spring buying season, but now it's the summer, so we've got spring and summer demand on top of each other. If you're curious, let me know. I'd be happy to do a market analysis for you. It takes me about 15 minutes, and we'd love to help you out. So give us a call. Thanks so much for watching.